All right, it looks like we are live now. So just want to welcome everyone to the Investing Strategies live stream tonight. This is episode 17. And today we have on Citizen of the Year, who he also has a YouTube channel talking about some investing subjects, I guess. And I'll just let him introduce himself however else he wants to.
Hey, thanks, Frank. Yeah, I've known Frank for a couple of years now, but it's the first time we've gotten to actually, speak one-on-one here. But a little bit about myself. I live in Chicago, Illinois. I'm almost 26 years old now. I work as an accountant, and I've been investing in the stock market for, coming on 4.5 years now. So I also run a YouTube channel. Have about a little over 4,000 subscribers. My stock portfolio is, I think when I checked today, it was a little under $110,000. Haven't been doing so hot this year, but it's kind of all of us. So yeah, that's a little quick introduction about myself there, Frank.
Yeah, so I guess the first thing we can get into is just kind of how you got into investing and kind of what got you interested in the first place and kind of what that looked like for you at the beginning stages.
Yeah, so I know it's kind of ironic, but I actually, even though I studied accounting in college, like I never really knew anything about the stock market. I felt like it wasn't anything they ever really taught us in any of the classes. I always thought investing was something that only like really rich people did, or so my kind of start of investing was that when I started my job, they had this like 401k that you can contribute to. And people like me, like I analyze every step of everything, right? I need to know exactly where my money is going to. And a lot of people with like 401ks, they're so blindly like, oh yeah, let me just contribute like 6% or whatever the match is. I don't care. And they like have no idea where their money is going toward. And I was like, I can't do that. I need
Yeah.
to know exactly where my money is going to. So started looking more into that. Started seeing, can people actually beat the market? Expense ratios, like the expense ratios for my old company for their 401ks were ridiculously expensive. My new company that I started earlier this year, their expense ratios are a lot more reasonable, like maybe 5 basis points compared to my old company's was maybe a full 1%. But I guess my overall point though is that most people do not look at what they're investing in, right? So
Yeah.
that was just kind of my start of investing, right? I started finance YouTube was so much different maybe like 5 years ago when I first started.
Yeah.
You had like people like Ryan Scribner. Back then, if you made a video about like ETFs and how to invest, those would easily get like 100,000 views. You definitely couldn't pull that off today. But I basically just binge watched YouTube videos every day I got home from work. I learned so much about investing from YouTube. So this was in 2018. And then in 2019, that's when I started my own channel, just because I loved investing so much. And, I don't know about you, Frank, but like for me, it's like, it's really hard for me to find other people that also enjoy
Yeah.
talking about stocks as much as I do.
Yeah.
Nobody wants to talk about, oh, hey, JP Morgan Chase just paid me a dollar dividend, right? They want to talk about Bitcoin and whatnot. So that's a little bit about how I got started.
Yeah. So I guess like where did you make the transition from just investing in your 401k into actual like individual stocks outside of that? Did you just like do more research and find that was something you were interested in, I guess?
Yeah, I mean, I started working because I graduated a little early. So I started working at 21, and I obviously like 401ks are meant for retirement, but I was like, man, do I really got to wait like 44 years to ever touch this money again? So I contributed a little bit to my 401k. And then probably like just a couple months after working, I just started, Robinhood was obviously the big thing back then. And at that time, Robinhood was the only one that offered, commission-free trading. So I made a Robinhood account. At the time, like, my investing knowledge wasn't, as knowledgeable as it is today. So think the first stocks I bought were like AT&T, which I still hold to this day, and then Ford Motor Company. And the only reason I bought those was because I recognized the name and they paid a gigantic dividend. So looking back on it, that's definitely not how you should be investing.
Yeah. Yeah, I think Ford was definitely one of the first companies I bought like a while ago, back when they still paid a dividend. But so when you were investing, what initially, I guess, what were your kind of goals with your investments? Was it just like something you were interested in, something you were trying to do to accumulate wealth, or did you kind of have something specific in mind?
Yeah, I think for me, I mean, it's still kind of the same goal I have today is that just, my dividend income will one day replace all my living expenses, right? But I think I was being a little ridiculous back when I first started. I was like, oh, I can, just save like 80% of my income and then I can retire within like 3 years. And that obviously didn't come true. And, my goal now is to retire by the time I'm 40. So that'd be about, 14 years from now. I do think that's reasonable. Um,
Yeah.
Certainly think that, if I can get my living expenses lower, maybe even do some of that, arbitrage with where you live in a lower cost of living place, maybe overseas or something. That's a way to make it happen sooner than later.
Yeah, Chicago probably isn't the cheapest place.
Compared to a lot of the other big cities, I've heard it's a little bit cheaper. But no, the property tax. I just bought a condo back in
Okay.
December, and property
Awesome.
taxes here are just insane. Like, I think Illinois has like the second highest property tax in the United States.
Okay, that's interesting. So yeah, what kind of investments do you make, like specifically? I kind of know this, but I just want to share it with other people. Is it mostly individual stocks?
Yeah, my portfolio is mostly individual stocks, but I will say that the triple Qs, I'm looking at my positions right now. The triple Qs are the second largest position right now at just under $6,000. And then SPY is also making a run in the top 10. I have $3,200 in there. So other than,
Okay.
yeah, I have SPY, the triple Qs, and then of course I have the income ETFs, which are, just a basket of stocks that do options trading.
Yeah. And kind of what are your criteria for picking those stocks, or what kind of things do you try to look at um, for those dividend stocks?
Yeah, so for dividend stocks, you try to go based on what Buffett said. You want companies that have great moats, companies that definitely have that name recognition, like Apple, right? People are always going to be buying Apple products. Basically, if they're able to meet a demand that's really popular right now, right? Like Nvidia is one of my biggest positions, right? It's a low dividend company, but they
Yeah.
offer so much in gaming and data centers, that really sets themselves apart from others. Um, so you just want to look at their financials, right? Are they having, increased revenues, increased cash flows? Does their balance sheet look good? Is management making smart choices with their money, right? You had back when C-19 happened, right? There was all these companies that, especially the airline companies, right? They, over the past decade, had spent so much money on share buybacks that right when the economy started not doing so hot, they started, begging the government for bailout money, right? So you want to make sure
Yeah.
that the companies are being run correctly. So yeah, I mean, you obviously want to invest in companies that not only pay dividends but also increase their dividend over time. I also try to tell investors, hey, like, don't just buy the company that pays out the biggest dividend yield. Buy
Yeah.
companies that have the history of increasing their dividend by so much. So, one of my favorite companies is United Health Group, UNH. So I think right now, if you check, their dividend yield is probably less than 2%, but they have been aggressively been raising their dividend like 20% every year. So that really makes a difference in the long run.
Yeah, that's awesome. Um, One thing you mentioned was like talking about management. Is there anything like specific you do to, or specific you try to look at in regards to management? Because that's something like I don't really have a super great, I guess, concept of like how to evaluate management, or like decide if they're doing good things or bad things, or just kind of get a better grasp of that. Is there anything you do specifically or look at, I guess?
Yeah, it's certainly tougher for someone like me. I probably own way too many companies. I think my portfolio has like maybe 45 companies as of today. So if you own less companies, that would probably help you be able to keep, up to date on, day-to-day activities of the company, or, be actually be able to, listen in on earnings calls. But one thing that I think is important is if a company has, consistent leadership for a good period of time, that probably means management is doing a good job. So, if the company is getting a new CEO, every 2 years, it's probably a sign that something's not working in the company. I know Disney recently has had like 3 CEOs in the last, ever since I've been invested in the stock market. So obviously Disney stock price has not been doing very hot either. So, those are things that I would look at.
Okay, that makes sense. That's a definitely a good point, talking about like how long they've been around. So I guess like when you're investing in your stocks, you're buying them, and what kind of strategy are you using to buy them? Like, are you looking for specific prices on stocks, or are you just kind of like putting money in on a regular basis? And how do you, I guess, make decisions, day to day of when you're buying stocks?
Yeah, so I think for me, I always buy stocks on Fridays, and I feel like that's really helped me avoid, either panic selling or, FOMO buying. So the way that this originated was when I first started working, one of my work assignments, they actually didn't work on Fridays. So we would work 4 10-hour shifts Monday through Thursday. So I always had Friday
Okay.
off, and that was my day to just concentrate on stocks. And I've continued that strategy even after I left that assignment. So every Friday, I will contribute money into my stock portfolio, and it doesn't matter if the stock market is going up or if it's going down. Every week, I try to contribute the same amount, and I try to buy stocks that are generally toward their 52-week lows. Obviously, it's hard to always accurately predict that, but and then there's also stocks that rarely go down. So companies like Pepsi, I've been waiting so long to get them on a dip.
Yeah.
It just feels like they
Yeah.
don't.
Same.
So yeah, I follow the dollar cost, DCA for sure.
Okay. Yeah, that's an interesting strategy. So you like don't buy anything like Monday through Thursday, just on Friday, is what you're saying?
Yeah, I think that helps out on the FOMOing and panic selling, because some people, they're, because like, let's say Apple stock goes down 1% today or tomorrow. You don't know if it's necessarily the bottom, right? I mean, I
Yeah.
guess it's kind of creates just kind of a strategy.
Yeah, that's good for sure to have like sort of a structure in place there. Um, that's definitely makes sense to me. So you're kind of investing like a set amount each week, you said. What are your like, I guess, long-term goals with that? I mean, you said you have the goal of retiring by 40, but is there any like thing you see in the future that will change with your investments, or you're gonna just kind of keep doing the same thing?
Yeah, I can't imagine it changing too much, right? I mean, I bought my first real estate property this year. I've been trying to potentially keep investing in real estate. I don't think I would be somebody that would like to be like a landlord, but I have looked more into like crowdfunded real estate. And I know like
Okay.
Fundrise is really popular on YouTube. So that's something that I want to potentially get into. Unfortunately, I don't think the drop in the housing market has been accurately priced in yet. So I am anticipating a little bit of a drop off here in the housing prices. So
Yeah.
once that happens, I might try to swoop into Fundrise. Unfortunately, Fundrise, you basically need to lock your money in there for like 5 years, right? You can't
Yeah.
just easily take it out. It's not like buying a REIT
Okay.
and just selling it. But I mean, overall, I plan on just continuing to buy, ETFs, dividend stocks, triple Qs, and just continue to grow my dividend income. So my dividend income, my biggest months are now around $260. So it's definitely been growing over the years.
Yeah, that's awesome. What's like, what would you say are like an advantage of using like Fundrise rather than just investing in REITs? I guess.
Yeah,
Like
so
I don't really know that much about it, but maybe that's a stupid question. I don't know, but I don't know the answer. So
no, you're definitely right, because at the end of the day, Fundrise is still taxed as ordinary income, just like REITs are. Um, I guess I was looking at Fundrise's page, and their returns are close to like 9 to 10% since they've become like a company since I think 2013. So I think that would be a little bit better than most REITs. I think it's also some people enjoy, with REITs, it's technically still a stock, right? So the ticker, the value for that changes every single day. With Fundrise, you don't see that price fluctuation that easily. So some people like how it's not necessarily tied to the stock market.
okay, is like the value more directly like tied directly to the real estate as opposed to like the market whims?
Yeah, I think it's just so much because like real estate, there's so much negotiation that happens when you buy and sell, right? Like, my house, it's appreciated a good amount, according to Redfin when I last checked it. But technically, when the time does come when I actually sell it, there's going to be a lot of negotiation that happens, and I know that that price isn't necessarily set in stone. Where like a share of Apple, you can see what the going rate for that share is at any given moment.
Yeah, okay, that makes sense. And I think with Fundrise, I don't know like what this is called, but I know there's like some other tax form you have to file. I think that's just like not as easy to file because of that. I think it's called like a K1 or something, but I don't know why, like what the purpose of that is or anything. But I've just heard it's like a pain in the butt or something like that. So I don't know.
You might be right on that. Luckily, I do hire, even though I'm an accountant, I don't deal with taxes. I do actually work with somebody that has their own YouTube channel, and they did my taxes for me this past year. So, hopefully he would be willing to help me with that. So,
Yeah, yeah, I don't know. That's just what I've heard. I haven't heard much about it, but um, yeah, I think the real estate route is interesting. It's definitely something like I'm considering, but like you said, I don't know if I really want to be a landlord. And at least like at this point in my life, in
yeah,
order to be,
you can get real estate for pretty cheap in Ohio, can't you?
yeah, it's probably cheaper than a lot of places, I would say.
Yeah.
But I guess like for my thought process, I guess is that like if you want to be a landlord, that's kind of like something you need to kind of be in like a stable place,
Mhm.
like more of a stable point in your life, unless obviously you're going to go with like a property manager or something like that, which is just going to eat into your profits. But I don't know. I just don't know like what that would look like for me at this point. And
Yeah, there's
yeah,
definitely great tax benefits of being a landlord, right? You can just
yeah,
write everything off as a business expense or depreciation. Real estate tends to go up in value. But yeah, like you were saying, even sometimes, even if you do get a property manager, I feel like sometimes you need to manage the property manager as well, just to make sure
yeah,
they're doing their job correctly. But for each person to their own. So
yeah. It's definitely something like I would have to learn more about at this point in order to really figure that out. But again, at this point, I don't really have the capital right now to be able to like do something like that. So it's just kind of getting the wheels turning for me and starting to consider it. So it's nothing like going to happen anytime soon. Someone actually asked about what is better, Bank of America or Ally Financial. Bank of America has dividend history, but Ally might be a newer option in the banking sector. Do you have any thoughts on that? I don't really know much about Ally at all.
yeah,
Um,
I hold. hold about 50 shares of Bank of America in my portfolio. I know they recently just raised their dividend. I know their dividend is heavily regulated by the Federal Reserve, right? There's only so much
Yeah.
that they can pay out under their stress test, and that's why JP Morgan Chase wasn't able to increase their dividend this past year. I know Ally pays around a 3.5% dividend yield. Ally is heavily sponsors a car in NASCAR, and I know that's a budget of around like 20 million a year, so that's a lot of money that they're shelving out for that.
Yeah.
I would have to look. I've had some people actually request Ally on my channel as well. I just have not looked at them too much. It looks like they've done pretty well over the past 5 years, up 55%, paying a 3.5% dividend yield. That's not too bad.
Yeah. There's someone I know who's like investing in stocks and stuff. He's like really into Ally, but again, I don't know that much about it. I mean, they don't have like a super long dividend history, but they have been growing it pretty quickly, which is definitely a good thing to see initially.
Yeah, I would have to see if their like revenues are also growing in line with that as well. Looks like they have 6 years of dividend raises. Their payout ratio seems to be very low, only 16%.
Yeah. But again, like you said, if their revenues and earnings aren't growing that much, like that's not going to be sustainable to grow it at 30% a year or whatever.
Right.
So yeah, I guess that's one of the things I would suggest you can look at is whether their revenue and earnings are growing, that quickly, because ultimately, like, essentially, if the earnings and revenue aren't growing that quickly, then the dividend isn't going to be sustainable for too long. But yeah, someone else asked about SoFi, which
yeah.
I don't know that much about them. I've actually done like some option trading with SoFi, and that's gone generally well. But
yeah,
I don't know. Do you have any thoughts on it?
Yeah, Louise is asking about SoFi just because like I talk about it so much on my channel.
Yeah.
Unfortunately, I've been buying SoFi at all the worst times. Back early last year when like literally every stock was just going up, like you put money into anything, right? It would just go up so much. Anything that was SPAC or IPO related, it would just go like anything that was even talked about on Wall Street bets, I feel like just got inflated so much. But
Yeah.
SoFi, I feel like, the business model is actually really good. I like what their CEO, Anthony Noto, is also doing with the company. The bad part is that SoFi, it relies so much on student loan refinancing. And unfortunately, with, I'm going to try and keep this non-political, but with what the Joey B administration has been doing with just kind of, and the Trump administration did this too, is that they were deferring student loan payments, right? And they're basically going to defer them until after midterms now, right? You're not going to just say, oh, hey, right before midterms, you all have to start paying your student loans. But because people don't have to pay their student loans, SoFi is not able to make as much money as they would have had they gotten to refinance student loans. So unfortunately, SoFi has just been, getting slammed because of that. Now I own over 500 shares of SoFi as of today, but I am down a very good amount. And I do think that's, I'm taking that as a learning opportunity too, right? Is don't just go all in on one stock, especially when the stock isn't yet profitable. Just because, again, in a bull market, everybody looks like a genius. So it was definitely a good learning experience for me. But I still think SoFi is a good company and it will go up in the future.
Okay. Yeah, that is interesting. Like, how do they make money on, you said refinancing student loans? So, like, how do you make money on that? I really don't know much about that, I would say.
Yeah, it's definitely a little bit complicated, but they are kind of able to package student loans and kind of swap that with as kind of like a investment with other companies. It's very similar to like mortgage-backed securities and how like they're kind of used as like a pool of assets, and then you're able to kind of trade based on the spread of the difference there.
Okay.
Yeah, I mean, obviously, if they're making money on it, right? Like there's definitely it's definitely a profitable business, and I think like the rising interest rates are probably helping a little bit there too.
Yeah, that makes sense. I guess a question in general is like, how do you I guess learn more about companies that you're not invested in, or kind of what do you do there? Because just like talking about the few companies we've talked about here, like just because I'm not invested in them, I feel like I don't know that much about them, and that's something like I guess I'm trying to get better at. It's just like knowing more about companies I'm not invested in, so that like I can just make better decisions in general and kind of consider all my options, I guess. So do you like regularly look at companies you're not invested in, or how do you learn about those?
Yeah, I mean, definitely all the time, right? I'm always watching other finance YouTube channels, right? Like I always see what other people might hold in their portfolio, see if that's,
Okay.
and then, do further research, see if that's a company that would look good in my portfolio. Now, I try not to do this just because I already own so many stocks to begin with that like a company has to really stick out if they want to be added into my portfolio these days. So I can tell you in 2022 so far, I think the only companies that are new that I've added are there's a company that's called NASDAQ. Like it's an actual company. It's not an ETF.
Yeah.
And then I've added NASDAQ, and then I've also added Lowe's, which I'm sure most people have heard of. It's the the home improvement chain. So I think other than those two companies, not sure if I've added any other new ones. So
Okay.
yeah, so I think just to answer your question, like I do watch a lot of YouTubers, see what they might be talking about. I'm on those investing sites like the Motley Fool, the Seeking Alpha. I'm on like a few dividend blogs as well. I see what some people on Discord are talking about. So those are kind of ways to keep on tabs on companies.
Yeah, that's a good point. I feel like I don't like I might see that stuff like on the surface level, but I don't go like deeper, I guess, to get a better understanding. But I don't know. I mean, personally, I'm content with like the number of positions in my portfolio, and I guess I feel like there's something to be said for just like focusing on what you already own, you know, and not really worrying about other stuff. But at the same time, there's certainly good opportunities elsewhere that
How many
you can probably always find.
how many companies do you own now?
I mean, I think it's like 22 probably. It's not like too many at all.
I feel like 22 companies you can still kind of keep up to date on most of their like quarterly earnings, and like they're doing really badly that you could still stay up to date.
Yeah, I definitely can do a better job of that though.
Usually when I invest though, I try to invest with like the mindset that like to buy it and just set it and forget it kind of thing, right? Like even if they have a bad earnings or a bad year, like I would still believe in the business that they'll be able to rebound.
Yeah. Yeah, that's a definitely a good like thought process, and just like as long as you do the research up front and understand what's going on, then most likely you'll be fine. But I definitely do like to try to you know see what's going on a little bit, because things can change for sure, and it's good to be aware of it, I guess. But yeah. So right now, oh, Dan's talking about 3M. Why don't you love 3M these days?
Yeah, so I own a good amount of 3M, but 3M is just lawsuit after lawsuit with these guys. It's
Yeah.
like every time you read them, they're doing something like super destructive in another country, third world country that's left, people like, it's obviously a sad situation, but like, like they've seriously affected a lot of people's health all over the world. And it seems like they're going to be paying for it out of their pockets.
Yeah. Actually, when you were saying how many companies you added this year, I was thinking I don't think I've added any, but I actually did add 3M, which is I think the only one I've added this year. But
So
it's
I'd
been
say
like,
if people ignored that 3M had such a ridiculously high starting dividend yield and didn't have its amazing track record of like 63 straight years of increased dividends, if you eliminated those two things, I don't think people would be. I don't think people would like 3M as much as they do these days.
yeah, and the dividend growth has been like atrocious the past few years. And that's honestly like why I didn't invest before, but it was just like just the stock price looked pretty good to me. So I decided to invest a little bit, and it's like a pretty small percentage of my portfolio, but
Yeah, I can't see that getting better with the amount of money that they'll have to pay toward litigation. But yeah, as you said, they've only raised it like a penny each year, and that's literally just to keep their streak alive.
yeah, but it's definitely better than nothing. We'll say that, but yeah, it's it's an interesting like situation there, and honestly, maybe it wasn't the best decision because, like I've been saying on my channel for a while, like one of the most important things for me at this point is like dividend growth and how much the companies are going to be able to grow their dividends.
Mm-hmm.
So I don't know, maybe it
I,
wasn't the best choice, but I thought it was a pretty good price, and it's just a small percentage of the portfolio. So
I think a good alternative to 3M is Honeywell.
yeah, I
They
think
seem
they're
to,
a pretty good company.
yeah, they're also an industrial company and also have that dividend history, and I think they actually have a much better dividend growth record the last 5 years.
Yeah, Honeywell's business is like, from my perspective, it's like a lot different than 3M's, even though they're in the same sector. But
Mm-hmm.
I mean, yeah, it's still a similar company for sure. So, what stocks are you looking at these days?
Yeah,
Anything in particular?
let me go through my latest purchases. I know I've been buying a lot of Starbucks, and they have been going up a lot recently.
Yeah.
I've also been buying a ton of Applied Materials, which might not be as
Okay.
well known. So Applied
Yeah.
Materials is like a semiconductor equipment company. So semiconductors are found in literally everything. Anything that's electronics related has semiconductors in them. So I've been buying a ton of AMAT. So my goal is to get my AMAT position at almost 100 shares. I'm at like 34 shares right now. And then once I get it to 100, I can start doing options trading on it. Let's see. I've also been buying a little bit of Store Capital.
Yeah. I wish I mean, I guess I can buy more, but I just own like REITs in my Roth IRA only, so just for like the tax thing. And I've already maxed it out for 2022, but yeah. I think my average cost is like 30 or 32 or something like that. So I'm down like a fair bit, but it's fine. The
Yeah,
drips are helping a little bit.
I don't know if the reason why they've been down so much is it just because of an inflation, because their occupancy rate is still like around like 99%.
Yeah.
It's still a
Yeah.
very good company.
Yeah. And like the amount that they just continue like growing their their properties and just keep buying more real estate, essentially growing their portfolio, just I don't know, that's impressive to me. So
For sure.
yeah.
Also been buying Vici Properties, which used to be, or at least it acquired the company that I previously owned, which was MGM Growth Properties. Um,
Okay.
So I went to Las Vegas for the first time last year, and I was just very, very impressed with like the hotels and casinos, and it was just jam packed with people. And I was like, you know what, I need to get a piece of this pie. So I started investing in them, and they offer a great starting yield too. It's like well over 5%. And you know what was impressive is even during the C-19 pandemic, like when everything was closed, Vici and MGM properties, they still paid dividends that whole time, even though like they,
Okay.
technically they wouldn't have business, but they do own the real estate, not necessarily like the actual, casinos and that part.
Okay. Yeah. Yeah, that makes sense. So I guess what is your I know I've heard you talk about options a little bit before. What are you into with that? What do you do with options?
Yeah, so I feel like I've always gotten a way too greedy with options in the past. Yeah.
That's definitely easy to do.
Yeah, back again when the stock market was like doing nothing but going up. I was doing some options trading on Neo. And at first I started making like ridiculous amounts of money. Like every week I was pulling in like close to $100. And then there was one week where it all just went south and like Neo dropped like 15% in like one day. And then it just continued to go down. So I mean I still believe in Neo like in the long run, just because like, as much as I don't really like the Chinese government, I know like Neo will continue to thrive in China, just as an EV company. But yeah, I mean, I try to do more covered calls these days. But definitely, I think in 2021, I think I made over $2,000 doing options trading. But unfortunately, I will come nowhere close to that in 2022.
Yeah.
But the long term goal, though, is because I continue to dollar cost average every week. There will be a day where I will eventually get all my positions to close to that 100 share mark. And, when that day comes, I might be able to enjoy that early retirement, because then I can just easily do the covered calls every week and generate some income. But it's still a far way out.
Yeah. I think that's definitely a good strategy and has a lot of like potential. It can definitely get like complicated pretty quickly, I think, if you have a lot of positions. But um, yeah, you were just like selling puts on Neo then.
Yeah, and then if I got assigned, right, then I would basically do the um man, what
Wheel.
yeah, the wheel. Sorry. It's been so long that I forgot what the term was. I
Yeah.
would just do that strategy. And like I said, I at first I started making pretty good money doing it. And then yeah, one trade just went really bad. So I have heard just from like other options podcasts that I've listened to, is that you should try to switch up the investments. Like, let's say you're doing 5 stocks that you're doing options trading. Don't like do the same stocks every week. If you try to switch it up, like every week do a different company, the chances of you having that issue where Neo goes down 15%, that gets mitigated to an extent. So in the future, I think I'm going to try and practice something like that.
I mean, I don't know if that necessarily makes sense to me. I would think it's just like based on the stocks you're investing in. Like, I
It,
don't know. Maybe
I,
that could help, but
yeah, I mean, I definitely think you're right to an extent. I mean, like, it's not like Neo goes down 15% every week, though, right? It just happened to be that
yeah,
one week that it fell down so much. And then if I had maybe
yeah,
practiced that strategy, I would have gotten in at a much better price.
yeah. I guess that makes sense, but like, yeah, if you're just trading options like every week, there's potential for that to happen. But
For sure. But yeah, I
like
mean,
me personally, I guess I would think that a better mitigation strategy is just to trade options on like more stable companies, I guess, and not, get as quote unquote greedy. And then if the stock drops and you get assigned, then it's not that big of a deal if it's like a company you want to own. But obviously, you're gonna make less money with that, lower premiums. But
For sure. Yeah, it's all a learning process. I mean,
Yeah.
I'm glad I made these mistakes while I was still young rather than when I was much older and I would have lost a lot more.
Yeah, for sure. I think one of the things like with options for sure that can definitely affect it a lot is just like volatility, because that's kind of like where options prices are derived from, is like essentially uncertainty or volatility in the market. So that's something that I try to look at a little bit, is like the VIX, which is like the volatility index essentially. Because for example, if you're like selling an option and then after that happens, the volatility goes up a lot, then most likely the price of that option will increase just because of the volatility increase. And then you're like, there's less chance for profit there, I guess, if the price increases and you sold it initially per se.
Yeah, no, it's definitely tied into that volatility. The more volatile it is, the more premium you'll collect. I mean, that's why I kind of like these income ETFs, right? They do so much of the work for you.
Yeah. Yeah,
Like
I'm not the biggest fan of them, but I think I don't know.
like
What were we gonna say?
yeah, I mean, obviously, before Amazon and Google did their stock split, it would almost be impossible
Yeah.
for the ordinary investor to get like $300,000 for options trading with them. But
Yeah. I think some of them definitely have their um, advantages. And I think they're definitely good for some people, but I don't think it really makes sense for me at this point. Especially definitely for something like QYLD per se, I don't think makes sense for me at all. I think one of the like lower yielding ones that potentially has more growth could make more sense. But I don't know, that the likes of like QYLD seems like something you would just use, when you need income at that moment and aren't really concerned with the long-term value of your portfolio. But
yeah, for sure. I
that's
mean,
kind of my perspective.
yeah, and you definitely seen me make a lot of videos on these income ETFs on my channel, and I always tell people like, hey, these are more geared toward people that are in the wealth preservation mode of their investing journey. It's not for those that are in the wealth accumulation phase of their investing journey. So yeah, obviously for younger people like you and myself, probably wouldn't make too much sense. I think income ETFs make up like less than 6% of my portfolio. So I just like to have extra dividends come in every month. And I do think like it would make actually a lot of sense to just hold these in your like Roth or something, right? Then you're getting like a very good 10% return almost every year. That's pretty good.
Yeah. Yeah, and I think initially, at least for a lot of people, it wasn't really clear how some of these things were going to be taxed as
Mhm.
well, which is kind of, I don't know, it's not that big of an issue, but you'd certainly hope to know that
Yeah,
before you invest.
I know it was a huge controversy last December when Global X decided to kind of drop a bombshell on everyone when they were like, "Oh, hey, by the way, even though we've been telling you that our dividends would be taxed as ROC, return of capital, they're actually all going to be taxed as ordinary income." So that would
Oh,
be
is
a
that
big.
how it ended up?
Yeah, I remember a lot of
Okay.
people were mad about that, including myself, because
Okay.
that's a huge difference. If you own a lot of
Yeah.
shares of like QILD and you found out that it was getting taxed differently, that could be thousands of dollars that you might end up having to pay the IRS.
Yeah, for sure. Do you have a Roth IRA?
I do. I had when I switched my employer, I had mine transfer on over, and then I've been adding. Now it's synced up in my Fidelity, and I've just been adding a little bit to it.
What do you invest in there?
So right now I only have two positions. One is in X yield or XYLD, which is very similar to Q yield, but it invests in the S&P 500.
Yeah.
It has like an 11% dividend yield, which is very good. And then I also have SCHD, which is arguably
Okay.
one of the better dividend ETFs out there. So I'm probably just going to keep it simple in my Roth, just invest in ETFs, and then I'll do
Yeah.
more of the stock picking in my just individual portfolio.
Yeah, that's basically what I do. Yeah, SCHD, again, one that like I hear a lot of people talking about, and certainly the returns kind of speak for themselves, at least historically. But again, I just don't know that much about it. Yeah.
Yeah, SCHD. I mean, I like SCHD because it has kind of these criteria for screening dividend stocks. Like, oh, it has to
Okay.
have, like cash flows need to be going up X amount over the past 5 years. The dividend has to be raised X amount over the past couple of years. I think there's one also about it needs to be diversified in terms of the sectors that it's investing in. So, it's pretty nice that you have the fund managers doing all this extra work for you that would have taken you so much time and research to do. So I definitely do think SCHD is one of the better ones out there. Usually I've noticed these Charles Schwab products are typically one of the better ones out there.
Yeah. Yeah, I think some of the stuff I've seen from them is pretty good. Do you know much about VYM? Do you know how it compares? Or and that's like Vanguard's high dividend, like dividend ETF, essentially. I think.
Okay, I would assume Vanguard's, is it just kind of like passive? It's not like, does it have the same criteria? I'm not too sure about that. Like, does it have
I'm not sure if
uh,
it has like a criteria or not.
yeah, I don't know if it just kind of invests in like, the highest dividend paying companies.
I think it's more like tracking a. It's like an index fund, like it's trying to track a dividend, like the index of dividend companies or some sort of index of dividend companies.
Okay, yeah, let me do a back test, see which has performed better in the past.
Yeah. So is SCHD like more actively managed, I guess?
I think it gets rebalanced every so often, but it goes based off that criteria of like,
Okay.
yeah, companies have to reach like certain benchmarks to get included on that.
Okay. Yeah, I'm trying to look. Oh, yeah, VYM. Yeah, it's probably some sort of just like straight index because it's only a 0.06 expense ratio.
So it
Uh,
looks, I just did a back test. It looks like since the start of 2020, VYM has actually beat out, or I'm sorry, Charles Schwab has actually beat out VYM. Um, SCHD would be worth about $13,000, and then VYM would be worth about 11.7K.
okay. That's interesting. Yeah, they do have the same expense ratio, so that is I don't know, like things like that to me is like more than likely it's not going to be that big of a deal which one you choose. They're probably both going to perform pretty well, but at the same time you don't want to, at least for me, I don't want to just say, well, I'll just pick something and not really think about it. You kind of want to be intentional with your investments. At least I do. So
Yeah, at the end of the day, I think the vast majority of people should just be investing in index funds and
yeah,
not doing stock picking. Uh,
yeah,
I mean, we've just seen so many stocks get wiped out, right? People have probably lost so much money with like investing in all these hot stocks.
yeah. And like I said before, like investing for me is like fun and interesting, and it's not just about the money. It's kind of like, I don't know. I guess it's a little bit like a hobby, but I mean, sure, I'm investing so I can, grow my wealth over time, but I guess the way I invest is interesting to me and sort of like a hobby in a sense. So,
Oh, for sure. I definitely love like learning about companies as well. But yeah, Frank, I have to ask, like, how's the YouTube journey going for you?
it's definitely going slower than I thought. I mean, I guess I would say the quality of my videos is not where I would like for it to be, and um, I'm just not to a place yet where I have that. But I think it's something I'm not too worried about. Like it's just something that's kind of fun for me to do, and um, also it's something that just not like forces me to learn more about investing, but it's kind of makes you look at it more. Like if you're going to do like some sort of stock analysis on a company for a video, you need to kind of know what you're talking about, and you need to do some research and figure some stuff out. And that's kind of one of the reasons I like it. And for me, just um, and for I guess for some things, like you're trying to maybe teach something or explain something, and usually if you have to do those things, you really need to have a good knowledge of it. So that's something I enjoy about it, is just I guess what's sort of challenging me to become more educated about these topics. And I think I've probably learned a lot more about investing by making videos. Well, I don't know if I would say more, but I've learned a lot about making video, or a lot about investing from making videos, not just from watching other people's videos. Um, so I think that's a good part of it.
Yeah, for sure. I would also say that, like, you and I, we both talk about like ways to get rich slowly. But if we
Yeah,
talk about ways to get rich fast, I guarantee like the view count would go up a lot more, even if we talked about,
yeah,
not necessarily the greatest investments.
yeah. And I think the value of my portfolio does not help me either, because some people can like put these values on their thumbnails or titles and stuff like that, and that definitely helps people sometimes. And but at the same time, I think it's useful for some people to have like something more relatable. So I guess I'm trying to appeal to that aspect of it. So
Yeah, I mean, I remember I was so excited the day I reached 100,000. Then I can call myself like a 100,000-aire or whatever it's called. And then my net worth actually has not went up since November of last year, uh, which is
yeah,
pretty.
that sounds about right.
Yeah, like I remember, I think the first 36 months of my investing journey, my net worth went up every single month. And then for the past 9 months, it has not went up. So pretty crazy how that works.
Yeah. Do you like track your net worth pretty, uh, I guess, intentionally, like every month kind of thing?
Oh yeah, I've been tracking my net worth ever since I started working full time. I think more people should actually do this because it's a great way to visually see how much you've really grown. Like, because sometimes like when you look at your portfolio and you look at your bank account, you're like, man, like I feel like you know I'm growing rich so slowly. But like when I look at like, oh, here was my net worth like 2 years ago, and like how far I've come, like it's definitely a great motivator. Um, it's kind of similar just to like in life, you like, day to day, you feel like nothing in life has really changed. But like when you look back at how much has changed just in like the last, year or two, like so much really does change, but it just change happens over time that you don't recognize it when you're tracking it by day to day fluctuations.
Yeah. I guess for me, like I definitely look at it, probably a few times a year, but it's not like something I pay attention to that much. I feel like, a lot of my net worth is just like within the stock market in investments. And, I know that can fluctuate over time. And so that's kind of out of my control to some degree. So I guess maybe that's why I don't worry about it as much. But
Yeah, you're heading into your senior year of college now, right?
I think I'm like, I've only really done 2 years, but I'm probably about half done. So we'll see.
Okay, so you'll probably start working full time in like another 2 years.
Yeah, hopefully.
Okay, yeah, I mean, like once you start getting, a more consistent, bigger paycheck, like then maybe you can start tracking it. I think you'll really
Yeah,
start to notice.
yeah. That's one of the things like I not struggle with, but like is something in my investing that is not like super consistent is like my income because I'll work um, like for 3 months, 4 months of a co-op job, full time, and make some decent money, I guess. But then over the summer, I'm just taking classes full time this summer and not really working at all and making any money. So it's like just for me, it's kind of like almost rationing my money so I can invest like a certain amount or a consistent amount every month at this point. But I think over time, that will increase. And one of the things I kind of like struggle with almost is I think that whatever I'm doing now is like insignificant and not going to matter since in a few years I'm going to be making a lot more money and contributing a lot more. But at the same time, like this money I'm investing now has like so much more time to compound, I guess. So I think that it's more useful than I normally think of it as because of that time factor, I think.
Yeah, I try telling this to like when I'm just having ordinary conversation with like friends and family that are not as investing privy. Like I always try to tell them like it doesn't matter how much money you necessarily put in, but one thing that you'll never be able to get back is time. Like the more time that you spend in the market, the greater those returns are. Like
Yeah.
I was very fortunate to start investing when I was 21. Um, and that's something that definitely has helped me be a lot more better off financially than a lot of people my age are today who maybe still do not do any sort of investing or are just kind of burdened with like student loan debt or any of these other day-to-day struggles that we might have. But yeah, I definitely try to tell all my friends and family just get started as soon as you can because you can make up that time.
Yeah, for sure. Oh, Louis asked, "What is my major in school?" It's so right now I'm majoring in computer engineering, and I'm definitely so University of Cincinnati is like a 5-year program for engineering. I can for sure get done in 4, but I'm also trying to do a master's in computer engineering as well, and I'm not sure if I'll be able to finish that within the 4 years. I think it's possible, but that's what I'm trying to do. I am not majoring in art history, but actually, if we're being honest here, I actually do find art history somewhat interesting. If I'm being completely honest with you, but
I mean, I just remember when I went to college, I felt like 50% of those people had no business being in college. I think most of them were just there because their parents made them, or like they just wanted to get out of their parents' house. Like they had no intentions of actually like taking school seriously. But I did go to a pretty big party school, so maybe that's why.
yeah, I definitely feel sort of similar. I just feel like in general, a lot of people just don't have a long term mindset with like much in their life, and maybe that's just like me looking in. Like obviously, I don't know everything about someone's life, but just from what I can see of people, a lot of my peers' actions, I guess that's my perception. But
Yeah,
there, yeah.
no, I
Go
would
ahead.
say if you're like 20 years old and you are spending your free time making videos about finance on YouTube, you're definitely off to a good start.
And definitely in the minority on that, but
Oh, for sure.
yeah. And it's funny too because like one of my friends I know, I think he's majoring in like business and finance, and he wants to be like some sort of investment manager, but like he has like at this point no like practical investing experience, I guess, which is just like, I don't know, it doesn't make much sense to me. But
I'm telling you, bro, they don't teach us the right stuff in school. Like, it's not the right curriculum.
yeah, I don't know. One of my other friends actually was, I think he was in some sort of class that was talking about like futures and like options and stuff, which I don't know. It sounded like he was learning some pretty interesting stuff, and he knew more about it than me. But so, but that I would say that person in general is an exception. So maybe that's not. I don't know.
I mean, college is just so ridiculously expensive these days. They might as well try to utilize your time there. I just saw an article on like Yahoo. At a college in Texas, you can now pay money to take a class about the musician Harry Styles. Like, how is that going to help you in life?
Listen here, college is about broadening your horizons and expanding your experiences. That's what that class is doing for you. Hopefully that didn't make anyone too mad, but that's yeah, I feel like I'm kind of in the same boat there with you, but I think that, you know, like anything, like you get out of it what you put into it. And so, you know, if honestly, like if those people don't want to worry about it, if they want to take a class on Harry Styles, like it doesn't really bother me that much. You know, I'll just focus on myself and, you know, control what I can control, you know, so.
Yeah, I agree with you there, except that like I know like student loan like forgiveness is always like a hot topic.
Yeah.
So that's, I guess, the other side of the coin.
Yeah, that's definitely a good point. We'll be paying the bill.
But yeah, I mean, how are like student loans for you? Are you like you got like scholarships or just paying it off? Like,
yeah, so I have some scholarships, and basically like when I was born, my grandparents like started a college fund for me, so that has been very helpful. So I really don't have any loans or anything like that. I'm definitely like extremely grateful and fortunate for that, but that's, you know, hasn't really been an issue, I guess, for me.
yeah, no, that's definitely a blessing to have. For me, I think what helped was I went to an in-state school, so I didn't have to pay out-of-state tuition.
Yeah.
I picked a major that was only like 4 years. I, was able to graduate a little early, and then as soon as I got out of college, like all the money that I had saved up, it went straight toward paying off student loans. Like, I would not stop until student loans got paid off, and then I was able to do that, I think, a few days before my 23rd birthday. So that, and another great benefit of that is now all that extra money that I get coming in every month, rather than paying student loans, I can put that toward my investments.
Yeah. Yeah, that's definitely like a huge benefit of just being, either debt free for the most part, aside from like some sort of mortgage. Do you have any plans to like pay off your property early or anything like that?
Oh, I'd be foolish to do that, because I literally bought at the best time. Not only did I buy my house for a super low amount compared to where it's located, I also got like a ridiculously low interest rate. Like, I think mine is around like 3%. So
Yeah, that's awesome.
yeah, I'm definitely not going to be paying off any mortgages early.
Okay, yeah. Yeah, I mean, some people it's just like kind of a mental thing or something like that. That they just want to do that even if it doesn't make the most financial sense. But which I think that's definitely valuable. Like you shouldn't, like you don't always have to make the absolute like best financial decision. Like if you're paying off your mortgage early, like that's not really a bad thing. You just might be able to like optimize your capital allocation in a slightly better way, So
Yeah, for sure. I mean, I think obviously a lot of different variables go into that. But yeah, I mean, another thing about real estate is that people need to like really examine the area that they're buying. And
Yeah.
I also benefited that I bought during the winter months, and typically there's more competition in the summer months. So I know like people get into like bidding wars. And when I bought in December timeframe, I didn't have to do any of those bidding wars, and people were also willing to go down in price because they just wanted to get rid of the property in the winter months when they knew demand was down.
Yeah. That makes sense. So you said you don't really have much of a desire to like purchase more real estate, or that's probably not something you're gonna do.
Honestly, I keep like trying to like tell some like family members like, yo, let's just like pool up some money and buy something together. That way, like, if I go on vacation or something out of the country, there's someone else that's a backup that can handle a problem.
Yeah.
Uh, yeah, it's one of those conversations where it's like, oh yeah, we should definitely do that, and then in the long run, nothing actually ends up getting accomplished. But
Yeah.
yeah, I mean that's why I'm trying to like just continue to build more connections, right? And eventually there might be kind of a business opportunity where I could get into real estate that way. But in terms of just me being the owner, it's probably not something I want to do.
Okay. Yeah, that makes sense. Yeah, it's a constant thing I'm constantly thinking about. Not like constantly, but periodically thinking about is kind of all those things you just mentioned about getting into it and having to deal with issues and having to be around sometimes. So, um, yeah, is there anything else you want to talk about? Anything else we could bring up right now?
Yeah, I mean, I don't know. I mean, I'm just continuing to trying to pump out YouTube content, try to make a video once a week. The channel, I know you said like you felt like your YouTube channel was growing slowly, but I remember I think getting that first 1,000 subs is the hardest part, and then once you kind of break that threshold, it should be a little bit easier, I think, to reach every new 1,000 milestone mark. Um, and then I think just the more you make videos, right, the better you'll get at it too. Um,
Yeah.
and then you'll get like a good core of followers too. Like I'm seeing Lewis in the chat right now. He definitely comments on a lot of my videos. You'll get to get those like very core followers and really be appreciative of that. But yeah, I mean, like obviously I don't like. There's people that make a full time salary off of YouTube, and I'm nowhere in that ballpark. But honestly, even if I didn't get paid anything from YouTube, I would still probably just make videos for fun.
Yeah.
But I mean, it's definitely it's been a great like window to have. It's a great way to just meet people.
Yeah.
Ryan Giffen. I was able to
Yeah.
meet him in real life this past month. So
Oh, that's cool.
yeah, I mean, it's again just connection that I would have never had before. So
Yeah,
definitely,
honestly, sorry, go ahead.
yeah. I mean, like one day I'm sure we'll get the chance to meet too, right? It's just another connection.
Yeah. Yeah, that's also one of the biggest things that I enjoy about YouTube is just like getting to meet new people and hear new ideas and just do stuff like this where you can talk to people and kind of hear their perspective and just share that with people. I think is super valuable. So, yeah, thanks for coming on. Definitely everyone go subscribe to Citizen of the Year. I have his channel in the description, I think. So I feel like we generally talk about a lot of the same topics like dividend investing, and that's kind of what our portfolios are about. So definitely go subscribe to his channel. Thank you for all the viewers for watching and commenting and stuff like that. I really appreciate all the support, and also from Cody, thanks for coming on and taking your time out of your busy schedule, I'm sure, to just have this conversation and share your knowledge. So I really appreciate that.
Yeah. Thanks, Frank. And just one last point I wanted to make is that you can definitely enjoy all the benefits of YouTube and being in this personal finance community as a viewer too. You don't necessarily need to be a content creator,
Yeah.
but Thanks again for having me, Frank. And it's been good being friends with you these past couple of years, and excited to continue to see us grow these next couple of years as well.
Yeah, for sure. Thank you. And thanks everyone else for coming on. Bye.
All right. Thanks, Frank.